It's a tale of two gold markets. Now, Tim, what I mean by that is that overnight we see very strong buying out of Asia, and then come 4 a.m. we have European markets and the U.S. markets entering, and then boom, gold takes a hit. What's playing out here?
I think we're still seeing a bit of a flight to cash, definitely in Europe and maybe in the US as well. But having said that, in the Far East, we're still seeing huge, massive buying of the physical metal.
So it really is a tale of two markets, and how long does this play out? I mean, I was talking to one coin dealer over in Europe today who was basically saying, like, this could really be the short-term reality until COMEX traders and paper traders kind of get more confident, see gold rally for about a week, and then get back into the market.
I think that's very much the case. Also, you mentioned Europe. We also see that, or we definitely hear that the coin dealers are very busy. So the purchasing of gold in the physical market by retail investors, by family offices, doesn't seem to have stopped.
Mm-hmm. So does that mean that gold is still a safe haven, or is that now kind of off the table because we do have this volatility?
Gold is a peculiar thing, and I think basically people value gold in many different ways. Gold sits in the corner, it doesn't do anything, it doesn't move, it doesn't give you a dividend, it just sits in the corner and gathers dust. And people decide what the value of that pile of metal is. And that's pretty much what gold is. People are deciding what the value of it is. At the moment, we're seeing a flight to cash. Obviously, the volatility in the stock markets and elsewhere in the world hasn't helped. That people running portfolios need to liquidate their most liquid assets to meet possible redemptions and things like that. And of course, as equity markets have fallen, gold positions within portfolios could have risen. So if you're supposed to have, say, a 5% weighting to gold, because of the collapse in the equity markets, you may now have a 7% weighting to gold, which means you now have to reduce that weighting by 2%.
Wow, that's an interesting stat. So then how does that play out? How long does that take to sort of resolve itself, I guess?
Stability is what we need, I think, and it's how long it's going to get to get stability back into the markets. We're not really sure at the moment.
Mm-hmm. And then where does that leave silver? I would think not well.
Silver basically gets dragged along in gold's wake on the way up.
Not to mention it in industrial demand worries.
Well, in industrial demand worries, again, it's very much a tale of two worlds as well. We still see there's still good industrial demand out in the Far East. China continues to grow, India continues to grow. We see the emerging markets basically continue to grow. Whether what's on the horizon is another matter, but there's still definitely demand out in the Far East. And I think silver is one of those metals that is definitely, from all the research we've seen and that we've undertaken ourselves, is definitely correlated to the industrial cycle. So if a weakening in the industrial cycle, we will see silver weaken as well.
All right, Tim, thanks. I really appreciate it. So that's sort of the picture for you for gold and silver. We have two tails, the physical demand and then the investor demand. Thanks so much.